Oh, there we go. Yep, I was muted. Good call. Good morning. I was congratulating JW on being 92nd out of 53 people. How's everyone's weekend been? Great. My Saturday sucked. Today's gonna be even worse. Why? Somehow I got fucking tricked into driving to Binghamton, New York. Vacation. I've been contemplating life after being full ported pits at the bottom again. Cobra. How hot is she? Not like cute, kind of hot. Slightly, yeah, decent. You're a married man. I'm not married. What's in Binghamton, New York? SUNY Binghamton, apparently. She was like, "Oh, I gotta get back to school this week and set up my dorm. Can you give me a ride?" And I was like, "Sure." And because I was thinking it was local to the city, not in fucking Binghamton, New York, which is like 300 miles outside of the city. You brought that on yourself. I don't know about that. I feel like I'm not guilty of anything here, except not finding out the destination ahead of time. She's a graduate student, okay? My fucking hip is killing me. Campus housing? I don't know if it's a dorm room. Let's call it campus housing so it sounds less immature. I like that better. No, no, it's could have been a brag, isn't it anymore? Should have said no because you don't want to lose your parking spot. Shit, that would have been really smart. But I rent my parking spot. She's not in a sorority. Jesus Christ. That's far from New York. Yeah, it really fucking is. I stopped in a town to get gas and they had no internet. Like the whole town. The whole town had no fucking internet. So they didn't take credit cards. What are her pronouns? Her? You okay. No, not at all. We should have taken Horde of the Constitutional Silver. The fuck is that? I also got to hear about the history of Binghamton, New York on the way there, which is fucking the most boring thing ever. Their contribution to the world is skewered meats. Various skewered meats. Did you also go back in time on the drive? How did they have no internet? I don't know. I thought it was just like one gas station, like trying to con people into like giving them cash so they don't have to pay taxes, but it wasn't. It was all of the businesses in the entire town. They were just like, internet's out. So the town, I mean, I guess just reverts back to the 1950s automatically. I can tell you that I'm not going back to Binghamton, New York ever again. My Midwest town has never lost internet at a whole as a whole even. It was yeah, I mean, to be fair, the town was like deep in I guess the are those the Appalachians? Maybe. It's hard to lose dial up. Oh man, I know how it is not being able to say no to a cute girl driving across the country for nothing. Felt like that. I mean, I was almost all the way to Ohio, right? It's cute how you East Coasters think you have mountains. We do have mountains. They're just smaller. I'm in Miami spending my zero DT money. Fuck you. I'm not drinking any New York wine. We have that fucking mountain in New Hampshire. That's kind of tall. I don't remember what it's called. New York's highest peak is 5,300 feet. Are we pumping this week? Maybe. Well, yeah, let's talk about stocks. Why are people going on vacation in New Hampshire? I ate too much brie last night. Did you bake it? family? Are they whalers? Why the fuck do people go to New Hampshire? Like, how did your family end up there? What, did they lose a competition? No, her name was Brie. Popcorn's happily married. I drove an extra 10 hours on a month-long road trip for a first date with a girl. 3 years later, we're still together. I usually have strict rules about distance. That's too far. 10 hours is too far. Brinky, welcome to Tillionaire. Thank you so much, dude. Hit me up on the Discord. I'll get you added after the stream. Alright, do you guys want to talk about the market, or should I just, like, get back into my legal documents that I need to scour through? I had a turkey Reuben last night. It was disgusting. That sounds fucking terrible. Did someone force you to order that? Or did you do it by choice? You want to run through the Mag 7? It's about time. I think we're far enough through earnings season. You're around it. Could you talk a bit about IWM? It's, I mean, pretty well correlated with SPX right now. It may be a little less correlated, but I mean, I don't think it merits its own analysis. If it gets above 205, it could test 210. If it tests 210, it can push up again. If it fails 205, it's probably going to fall back to 200 and find support until a rate cut decision is made. Its recovery has been significantly weaker than QQQ or ES. It would probably perform well on lowered inflation expectations, but analysts are pricing up forward expectations for inflation right now. And shipping costs are still rising, even though more of that's getting eaten on the producer side. Some of it's going to pass through. I believe the next steps to test a relationship following a road trip is IKEA furniture assembly. If you both survive, it was meant to be. I refuse to build IKEA furniture ever. You guys out in Washington have to go on some long road trips to get places. I took a good look at growth stocks. Many look strong. This says there's at least some appetite for risk. No? Oh, there's still a ton of appetite for risk. There's just not enough leverage to risk on more, right? And there is, a huge amount of risk in stabilizing that leverage against the carry trade. Would a rate cut cause Carvana pumpies? Probably. Yeah. Just going to IKEA is a test of any relationship. I mean, unless you're there for the meatballs. It wasn't a one night stand. It was like four. Graduate student, campus housing. It's all the devil's in the details here. CPI, PPI. Yep, we got both of those this week. And in the most predictable fashion ever, analysts are now raising inflation expectations, trying to cut down forward rate cut expectations out of the Fed and trim the hedging and Fed fund futures, right? And so we've got both estimates for CPI and PPI markedly higher than the prior month. And there's a lot of assumed pass through from the last hotter PPI data, which may or may not happen, right? But we're gonna have those Tuesday and Wednesday of this week, and they will be pretty fucking impactful. Because everyone's now very aware of the risk in the carry trade, right? Which, despite JPM's claims, the leverage remains quite high. Historically, like 4x higher than the average. So some of the near term exposure to like the Japanese like 3 6 month bonds, a lot of that's been cleared out. But the like out on the 10, 20, 30 year exposure is still extremely high. And that's where a lot of those hold to maturity securities are being leveraged, right? They're not being leveraged in the short term. Thoughts on DVN this week? We could take a look at that before we go into the Mag 7, I guess. It's got a nice bounce when it fell back under 42. I mean, this is generally a range in which I'm like a buyer. Except I feel like I have enough of this, so probably just leave it on drip. We've seen a little bit of movement in nat gas prices, and there's a little bit of fear there. As we approach winter every year, we get a little bit, but the last two winters have been really mild, and I think Europe's stabilized their like nat gas supply chain pretty well. So most of what DVN's pricing in is oil right now, and really not their natural gas exposure. But oil's going up, and I think oil should still be around 80 to 84 for the majority of this year, right? I think EIA finally came in and trimmed their end of year estimates, and now they're a little bit more in line with OPEC's estimates, which are that we are going to have, a deficit in production going into the final quarter of the year, which would spike oil prices, right? And because of that estimate, like a lot of OPEC countries aren't going to want to loosen their cuts, like their production cuts, until gas prices get or oil prices get sufficiently high, right? And then they'll want to sell as much as they feasibly can. Is she a billionaire? No. I don't tell real people about this place, just like you guys. It's embarrassing. First question: what is the idiot trade? So someone was bitching about not being able to make. I'm not really sure yet. Someone someone was bitching about not being able to make money directionally, and I was like, you don't you don't need to pick a direction. And then I was like, here, I'll prove it. And then that's what it is so far. So it's just like a paper trade, and then they're supposed to be, well, mostly directionally agnostic. So far they've been ish. There was, well, okay, so Friday I sold calls, and then we dropped, but I didn't want to sell the put side of the condor, so it ended up not being like a neutral trade, and I just closed the calls because there was too much risk that we could drop further. And then I like sold a butterfly into the end of the day, which was neutral, and that made more money than the calls anyway. Although I could have kept the calls open because they closed out of the money. Speaking of which, how the fuck do I left align these? There we go. That's much better. But I still like DVN, for the guy that wondered. I mean, 4.45 is not quite as good as laddering treasuries, but it's got a lot more potential, I think, for growth if oil prices surge. And I mean, I don't think they're going anywhere or anything like that. So I'm not particularly worried about the price tanking below like $40. And there's been a couple opportunities to, take profit or get out. Since I started getting into this like fucking forever ago. It was like back in 23, right? DVN was a play somewhere in there. So there's been a couple opportunities like over 53 to, I don't know, sell in the money calls or take some profits and get back in. It's a decent amount of growth, right? I mean, from the lows, it's like 20%, 22% returns. If oil prices spike really hard, then yeah, it could go up to, back up to like the 60, 70 range. All right, I guess we could take a look at some of the Mag 7. From a technical side, Apple looks fucking terrible, but let's dig into its options a little. Mm, it's still pretty beat down. It's definitely got more range to the upside here, and gamma is positive on the dealer side. Uh, we got delta and gamma falling away from spot, gamma max moving up. I would say it looks fairly bullish, and at least into the OPEX expiry, we've got a decent amount of call interest still out at 220, 225, even 230. Getting above 225 seems pretty difficult here. Charms positive. There's quite a lot of delta in the money though. Um, yeah, I would say it's probably got room up to about 225. And then it might find some resistance. 220 maybe a little bit more likely though. So I would say pretty high confidence that it sees 220 provided conditions continue. The only problem with this is, the inflation data is only one day out, right? Like we have one trading day before PPI. and then 2 trading days before CPI. And if either of those are unfavorable, I mean, leaning into being bullish on anything could be especially tech, could be a huge mistake, right? If inflation expectations trim again, tech is going to sell back off. Right, dollar will decline and tech will sell off. The spread will narrow, margin conditions will tighten. Can't we just change the definition again and be all right? Well, we don't have another seasonal adjustment until later this year, and that seasonal adjustment is probably going to be it's probably going to adjust inflation higher, right? Like this seasonal adjustment and this like early 2024 adjustments are probably going to push inflation back up because all of the things that they rotated out that dropped inflation are going to come back in and they're not better. They're just the same as they were. They're simply not being weighted as heavily as they were. Is SPX 5500 an inevitable march of inevitability? No, I don't think so. I think we're still in a really bearish environment. We've been in it for quite some time. It's not unusual for us to mean revert, though, as we start to move into the SLD period. So over the next 3 days, pumps, Friday included, pumps are really common. And then, into SLD, if we're below gamma neutral, that tends to be uh, fairly bearish. Is Microsoft still looking bullish to retest 410, 415 range data permitted? With any, I just want to preface this a bunch. With any of the Mag 7, there's a big risk with the inflation data. So taking positions on Monday that you intend to leave open into the middle of the week are a big gamble. Um, Microsoft doesn't look terrible for 410. Um, there's uh, a bit of resistance there, though. Um, if it could get above 410, that would be a lot more bullish. But there's still pretty big fucking put wall. Not even just 410, but like 405 also. Out on November 15th. September 20th, there's about 12,000 puts at the 405 strike. November 15th has 45,000 calls at that strike. 410, a pretty significant number of puts fall off this Friday. But there's still a decent amount out in the September, November, or September, October OPEX at the 410 strike. And for calls at 410 are a bit weaker. Pretty big chunk of them fall off this Friday. And then the rest of them are mostly out on the leap expiration for like 117. um, Delta's not particularly supportive, and there isn't much to squeeze off unless it gets back above 415. Yeah, I would say Microsoft is probably going to trade between 405 and like 400 and 410 for some time. It doesn't really look like there's anything that's super bullish coming in on the chain. Um It's still under gamma neutral, so gamma neutral is 409.87, which is basically going to be all that interest at the 410 strike. So yeah, if it gets above 410, maybe bullish, but getting above 405, I don't think is a good confirmation of that. I got 2 weeks of theta on my 415s. Bought it a 404 range. Probably will sell if it tests 410. Yeah, I probably would too. I ended up not getting into Microsoft. I usually don't. Every time I want to get bullish on Microsoft, I kind of just like I never like the setup well enough, and I just don't take any positions. It's also weird. It's got like it's got exposure in Dow and QQQ and SPX, which I mean has stabilized it a lot against the drop over the last couple of weeks, right? But at the same time, if like tech doesn't rip, it's probably just going to stay mostly flat. Any significance to Jensen selling some shares? Jensen's done nothing but sell shares for like the last year and a half. I don't think him selling more is significant. He's got a fuck ton of them, so I mean, it's really not gonna hurt him much. I am kind of curious about Tesla this week. Um, Tesla's in a bit of an interesting spot. If Tesla can get back out above 200, I think it could squeeze off the puts to the upside. And there's been some in the money interest building up on it. I don't know how high it could go, but if it could get above, yeah, if it could get above like 207.50, I think it would have a pretty decent chance of squeezing off some of those puts. And it's still got like positive yeah, it's still got positive gamma and delta on the dealer side. IV's crushed pretty hard given the move in realized vol. And so I think I would expect that a move out to like from like 207.50 out to 240 would be pretty interesting. Hmm. Yeah, I guess I would I would just confirm on the gap fill there, but I think the positioning's pretty good. I wouldn't go long here. I would definitely wait for the confirmation, but were it to confirm, that might be a hell of a move. Volatility is really low, so options should be pretty cheap. It really only gets bearish if it fails 190, so the downside's pretty well protected. Hmm. Yeah, squeeze off puts all the way out to like 220, maybe out to 240. Gamma's pretty flat through there. That would push off quite a lot of Vega risk. Hmm. Okay, yeah. Yeah, I would say if Tesla above, if it gets above 210, I think like a retest up here or possibly even higher would be reasonable. Oh, son of a bitch. Hold on. Oh, wait, is that working? So here or out here, like that. Um, on a breakout here, and then if it fails 90 to the downside, it can dump. Nvidia. Mm, so Nvidia's got earnings coming up in 2.5 weeks, 2 weeks. Hey, Jorg. We got gamma neutrals down at 96. It's gotten a pretty hard bounce off of gamma neutral on basically every single test. Gamma's fairly flat to the upside of 105. Breakout at 110 might be kind of bullish. Pretty evenly distributed to the upside. I would say like break of 105, test at 110, break of 111, test at 115, and then from 115 up, gamma's pretty flat out to like 120 and 125. Mostly short calls in that range. I would say a lot of that could get squeezed off going into earnings if it starts running. Um, there's still like a lot of delta in the money on the call side. Which doesn't seem to be going anywhere. Most of it's longer dated, so I'd say it's pretty well supported at this price. It's probably very unlikely to lose 100. Um, realize volatility is starting to pick up on it, which is usually pretty bullish. Let me check one more thing. Oh, no, that doesn't work. Awesome. So yeah, this one seems pretty easy to confirm on the way up, but I mean there's a possibility that just selling puts below gamma neutral is better. Like it's even with the inflation print, it'll be hard for it to push under 100. So that might be arguably better, especially going into earnings than trying to play the long side. But if you did want to play the long side, the confirms are pretty easy, right? It's just break 105, break 111, break 120, right? And you could just stay long. So that one's not too bad, I guess. Netflix is kind of interesting. It recovered pretty fast on this bounce. They probably had some of the better earnings out of like the big mega cap tech stocks. And I think the options chain looks pretty bullish out to like 660. It starts to run into a little resistance there, but not much. And there's still a decent amount of call interest beyond that out to like even higher, out to like 680. And most of that call interest is a little bit longer dated too, especially 640 through 660. It is like right at, I think it closed like right above gamma neutral on Friday, like 633 versus like 6 GNs at 630. So that move into positive gamma should help push prices up. And then yeah, I would say a 660 target looks pretty decent on that. So that one might be a little bit more bullish, although careful with it because it is extremely volatile. It can move a lot day to day. Anything else that looked particularly good? Meta was all right. I guess I could check that. Meta's getting pretty close to Gamma Max, which is 543. There's still a bunch of call interest to the upside on it, 530, 540, 550. Most of that longer dated again. Uh, Decent amount of delta out at 552. A little bit of the shorter dated call interest fell off on Friday, but there's plenty of longer dated interest here still. Things on it really don't get bearish unless it fails back below 500 again. So it's got plenty of support on that side. Um, hmm. It will be really hard for it to push up into 520, but it could potentially go as high as like 540. How's vol looking there? Volatility is kind of falling, so maybe it's peaking out a bit. Realize vol's starting to pick up. Sold calls. Alright, if the out of the money calls are sold, it could get rejected. That's tricky. Yeah, I'd probably just stay away from that one. That seems too risky. Ooh, AMD could be interesting. I wonder how that's doing. Well, AMD needs to get above 140, but if it does, woo boy. It's got a lot of fucking range on it. Yep. So yeah, 140, 135 could actually be the confirm on AMD, but I would say 140 is a little bit better. If it breaks above 150, it could squeeze out to 200, pushing that in those in the money puts back out of the money or pushing them to close. Realize vol's starting to pick up quite a bit. I want to look at the 10-day. Yeah. So I would say volatility is going to start picking up on it as well. There's still quite a lot of delta exposure, and gamma is just starting to turn positive. It is a little bit under its neutrals, right? So it's still trading below GN and DN. DN is at 141. So I think that combined with the positioning and the technicals is probably where I would go long on a break to the upside. But it definitely has a very compelling amount of range. Because from like 160 all the way out to 200 is just a shitload of in the money puts. And if it hit that ramp, the cover bid would rocket the price. So that'd be something that I'd want to keep a really careful eye on, especially if we like if we move into a higher higher inflation break even environment. So if inflation goes up, um, that might be something to watch because a lot of money will flow back into semis, and maybe not all into Nvidia this time, right? Some of the news around Nvidia has not been so great. Amazon still looks bearish as fuck, honestly. Um, that might not even break out. Is that the last one? I think so. Let me take a look at Amazon's shit. Yeah, Gamma on Amazon's been collapsing pretty fast. It's just barely got back above DNGN. I don't think the positioning on it looks too hot. I guess there's some call positioning out to like 200, but it's got quite the wall of worry to climb here still. A break above like 175 might be confirmation of a move higher. But they're kind of getting hammered on tech selling off and the consumer being shitty. It's closed at like 166 on Friday, so gamma exposure is about 65 million positive. Yeah, I would want to see it over 170, maybe even 175 before I would say that this looks all that bullish. And pretty much any price up until that point could just fall back into the puts that are still on it, and it could slide back down to like the 150 range where things kind of flatten out again. So this one looks a little less stable. It's interesting that we're starting to see a lot more divergence in the Mag 7 options chains. Um I think that's important, right? Because dispersions benefited so much from levering broadly, right? Like they lever up all of the tech stocks, right? And some of these are a little hard to lever up compared to where they were 3 months ago. Um, Amazon's definitely one of those. That's going to be a fight to get that back out of this pit. Tesla's going to be a fight. AMD's looks like it's going to be tough for them to pump, but if they do, it'll run. But Netflix and Apple look a little easier. Nvidia is not as bullish as I would expect it to be, but there's so much interest at the major strikes that it's probably fine. Meta looks a little weak too. Looks hard to push Meta much higher. Despite the out of the money call positioning, it does look like it's a little harder to push up. And if they can't push vol up broadly like that, or at least on Microsoft, Apple, Nvidia, And Microsoft looks a little difficult to push higher. Uh, it's going to be really hard to stabilize QQQ against any sell-offs due to, negative data surrounding Fed fund rates. So, bit of a mixed bag. Probably some vol selling opportunities on the weaker looking parts of that basket. Maybe some vol selling opportunities on the stronger parts. Although volatility on all of them is relatively low compared to realized vol, so you'd be taking on kind of a little bit of additional risk compared to the pricing for getting such low premiums, right? So it may be more advantageous to just go long on the ones that look bullish rather than trying to sell vol against them. Anyway, yep, that's what I got for Mag 7. I feel like that was a good analysis. Is anyone still here? Everyone leave? I would have left. All right. What's up, guys?
So, anyways, yeah, that was the story. I took it out of my butt, and then I put a few more in. And then after I did that, my paintings, the colors in them just got so much more vivid that I couldn't help but be thankful for you. So, but anyways, I got to start the stream soon. Love you, Grandma. Bye.
What's up, man? Your volume was so low that I barely went through, but it was amazing.
It was a good one. I thought about it for a sec how I was going to do that.
You know who's really amazing? His grandma.
That's true. Yeah.
The things
Uh,
I just witnessed.
I mean, you know what? The fact that him and his grandma are that close that they can just talk about that is beautiful.
Ain't no grandma like my grandma.
How interesting do
How
you
you doing?
think? I missed a whole bunch of questions because my chat stopped updating like an hour ago.
No.
I just ran through like all of the Mag 7. It's interesting. Dispersion's having a rough time finding places to lever up.
Yeah, Jay
Um,
Fresh and I were talking about it, and he said that single stock calls have just absolutely tanked.
yeah, yeah, it looks rough out there. Like, I mean, there's a lot of like in the money put squeeze potential on some of them. Like AMD particularly looks frightening for the shorts if like momentum swings the other way on it, but it's going to be a bitch to lever up into all that negative delta on so many of them, right? Only really Apple and Meta look real stable. Like those are the only chains that look like they're still okay after everything. Microsoft looks, kind of middling. Oh, Netflix looked pretty good too. But Netflix and AMD both look squeezy, and then like Apple and Meta look just like bullish, like stable bullish positioning. Tesla looks like it's, $2 away from fucking dumping into the gutter again. Um, Amazon looks awful.
Well, I think that puts us in a good spot for Nvidia earnings at the end of the month.
Nvidia doesn't look so great, right? That's what threw me for a loop. So Nvidia still has huge amounts of interest at the major strikes like 105, 110, 115, but there's almost nothing in between. It's just like all that like longer dated interest. And I'm not sure earnings IV is going to be enough to squeeze off those short calls.
Absolutely not. I mean, I don't know if Nvidia. It's just so after Google's earnings, I think that the Dan Iveses of the world, but the ones with like at least half a functioning brain cell,
Yeah.
uh, they're starting to wring their hands about what's going on because, we got these giant companies just throwing money into a burning pit, and that's it.
I feel like that's really good for Nvidia though, right? Like that's what Nvidia cares about. They just want people to keep burning all that money, right?
I mean, sure, but it still makes those investors think to themselves, where are we in the cycle, right? Yeah, CapEx spend is up still, but once that CapEx doesn't translate to revenues for these companies, they're going to start forecasting, scaling back in that CapEx spend on AI.
I don't know if you were paying attention. Sorry for the low quality. I'm in the car for a little bit. I don't know if you were paying attention last week, but we were still getting some upgrades. I didn't see any downgrades,
Yeah, I saw.
which is just wild to me. It's like, okay,
I will say that
the
the upgrades I've been seeing have been broader. There've been more upgrades outside of tech, upgrades in utilities. People are starting to like, move a little bit of that bullishness over to more defensive sectors that are, currently debt burdened because they don't want to be caught on the back foot not recommending anything that would benefit from, cheaper credit, right? And so you are getting more analyst interest in general, like stocks that haven't seen upgrades or downgrades in like 8 months, 9 months are starting to get a little bit of interest. Like like Lumen, I mean I still don't like them that much. They have so much fucking debt.
I don't understand what they are. What are they?
What, Lumen?
Yeah,
Lumen's just a telecom company. They're like a enterprise level fiber provider, right? That they used to be a lot bigger than they are now, but they really leaned into the debt, and their rollovers were not at ideal times, and so they've gotten hammered a lot worse than like Verizon or AT&T, and they're like number 5 on the list of like fiber providers for enterprise level services. So
so we're
um
not even trying to make our own unique bubble anymore. We're just going right back to the .com bubble.
yeah, pretty much.
Awesome.
Yep. Yep. They're
Gotta love
late
it.
on Blackwell. It's not inconceivable that they miss. I think given all of the capex over the last 2 quarters, Nvidia's revenues should still be in line with expectations or higher. I don't
Yeah, I
think
don't
I don't
think
think we're
we're
ready for a Nvidia revenue miss yet because the cycle hasn't died yet. So right when we start to see capex into AI decline, Nvidia's revenues will probably suffer like the following quarter. And that's where we'll get the miss if we get one. And I would say that's at least 2 quarters out before like that cyclicality starts to highlight itself.
Yeah, I mean, don't forget. I mean, we still had Elon Musk buy $6 billion worth of chips for Grok or whatever. And basically, he took the ones that were slated for Tesla. So that's on top of the ones that have to be delivered to Tesla.
Yeah.
So, yeah, people are still spending.
Well, that's what's interesting, right? And that's what killed. Nvidia's starting to run into the same thing that killed FSLR for a while there, which was that demand for their product had far exceeded their capacity to produce that product, right? And the only way to ramp up production for FSLR was to build new facilities, right? Which caused a massive drawdown in capex. NVIDIA doesn't have a scalability option, right? They're entirely dependent on TSM. And, I mean, sure, TSM may scale in order to facilitate more output of, NVIDIA chips, but they may not. Right. I mean, and especially when you start to get down to like 3 nanometer, like this isn't solar panels. This is like 3 nanometer chips, right? Half, like most of which are probably not acceptable for enterprise use, right? So they're going to get binned out. And you're going to, so your total yield on production probably already sucks. And then to try to scale that up is like a multi-billion-dollar 5-year process. And
Yeah,
I
that's
think
kind of
like well, sorry, let me just finish that thought. I think TSM and Intel are far more interested in broadening that production scope rather than scaling up the specific part that Nvidia needs, right? Because they're going to want to start to lean into that chip X money and develop out their fabs here in the US and get their labor force trained up in the US side. And I think that's where their focus is going to be, which means Nvidia could be behind in production for years, decade even.
well, yeah. I mean, there has to be enduring demand for them to be behind production. I think fairly soon they're going to be a product looking for a solution. Uh, and actually, I think so. One thing I'll give them credit for is trying to push what they call accelerated compute, which is really just massively parallelized compute with lower precision.
Yeah.
Uh, I I think that actually has a fair amount of utility in like sciences and in engineering research and just well even in enterprise if you're trying to essentially simulate very complex things. If you do it right, you can actually leverage that to your benefit. It's not a perfect solution. You can't just it doesn't just scale linearly with parallel processes perfectly, but there's a lot of tricks you can play to get a lot of horsepower out of that. And they are pushing some of that stuff, and it is slowly getting developed and integrated into professional simulation solutions. But
I
to
feel like
me,
a
that's
lot of those simulations are on the research side and there's not a ton of money
well,
there.
no, there's a lot of corporate side simulation stuff. I mean, you think about like Ford, if they could simulate, the aerodynamics of their car and all of the little things that are going to happen there, and then iterate on those simulations. So then you start to think about optimization, like rapid optimization. That's something that right now is cost and time prohibitive. But if you could do that, if you could take that from weeks or months to days or even hours, that's a huge game changer that anybody out there that's designing anything that has to hold that has to have a mechanical output or really anything, thermal design, absolutely everything. Like so, to me, I see there's value there, but it's very small in comparison to the hype of the AI, and I don't. I still don't know that I understand why he's been pushing this so hard so fast. He has a long, enduring potential market there.
Because we've had this conversation recently. You want to capture as much market share as feasibly possible, as fast as possible, because it disincentivizes your competition, A, from trying to follow you into that space, right? And B, it ensures that by the time they do or catch up, you're already ahead of them.
Yeah, maybe that's true. I mean, the folks that are doing that kind of stuff that I just talked about are much less interested in like PyTorch and all of these like very specific AI tools,
Yeah.
CUDA stuff. I mean, they're much more willing to, save money on hardware to design something well for their own purpose instead of just boilerplate stuff.
Yeah.
So I don't know, but yeah, I guess I kind of agree. I think NVIDIA is going to beat. I don't see why they wouldn't. The question is going to be, what do they guide, and how much does the market believe them? I don't know if anybody listened to the SFBI call, uh, but those questions were much more critical and were much more worried than they were in the past. And I think that there were some questions that got asked multiple times because the CEO is a moron and just never answers questions, just like tries to use word salad to avoid it. But they weren't willing. We weren't willing to accept the word salad, so they kept asking them very similar questions. So I think they're getting concerned. I think there's a growing concern, and I think that's reflected ever since Google, right? Kind of, they missed on growth on their cloud side. Microsoft had, kind of poo-poo cloud side results. I think there's a worry there of how long this party can keep going.
Fair.
And it's shown up, right? I mean, before Google, the Meme 7 was like just shooting straight up. They got up to over 34% of the S&P 500, and then after Google, they just started going right back down. But they're still up like 30. They're in like the 32-ish% range.
Yeah, they're still insanely overvalued, right?
Yeah.
Even with the sell off, and what was our peak to trough on NQ? It was kind of huge. Like 17%.
The easiest thing to say is the last time the S&P was here, they were less overvalued than they are now, right? They're a larger percentage of the S&P here than they were the last time we were here.
Yeah.
So all these people talking about rotation and broadening, it's not true. We're just still so leveraged into all this garbage.
I have a question that everyone wants to know the answer to, including me and Dork. Are you on your way to an AMC right now?
No, I'm just picking up sandwiches for the fans. Yeah, I'm actually about to pop it.
QQQ have to rebalance all this shit. Well, they did that last year going into like our bigger correction, but I mean, QQQ is still down right now from like 11% from the high. So I mean, I don't think this would be the point. If they didn't rebalance back then, I don't think they're gonna now. Maybe into the end of the year we could see some rebalancing, but I doubt it.
All right, I'm gonna go grab those sandwiches. I'll be right back.
Yep. Yeah, it did lead to AVGO pumping big. The flows from those rebalances could be very substantial. Hey, Dork.
What's up, dude? How you doing?
I'm here. Do we want to talk about the carry trade a little bit? And how Japan's being a bunch of cucks? Because that came up this week.
I mean, it's certainly interesting. I mean, as much as the carry trade is interesting, I think the bond market just did some really interesting shit this last week.
Yeah. I'm sure you have some charts.
I made one chart because
Busy.
I was just talking to Jay Fresh and I was bored and I was like, let's just see consider real rates as overnight rate less annualized GDP growth, and I made a chart of it and I thought it was interesting because it's like you notice where it peaks and it's right at recessions, but that's either I think that's just a function of GDP growth going down, so nothing ridiculous there. But there is this chart, and I know it's Jay Fresh's favorite chart, showing the reaction of the bond market to the Fed.
Yeah, I could show everyone this.
Yeah, this one's a little more interesting because you see the green line up top with the white line. The white line's like the 1 month spread. And the green line is it's the 1 month yield to maturity spread, and then the green line is the 3 month yield to maturity spread, I believe. Is it the 3 month or is it the 6 month? Shit, I don't remember. looks like it is the 3-month.
You
Yeah, so
should
it's the
probably
3-month.
just track the 3, 6, 2, 5, 10, 20, and 30. It's a lot easier.
Yeah, I could add more lines, but I think I like ran into the limit of how many lines I could throw in a chart.
Yeah.
The security request limit and trading view. But the blue line is the 1 year
Yep.
spread on yield to maturity versus CAGR of hard goods is what I call the red line.
Mm-hmm.
So it's just super interesting what happened with yields over the last week. We almost bull steepened, which would have been insane.
Yeah. We came very
So
close just on Monday.
yeah, that was wild, and I think that's really what kicked off all the volatility, right? Like the spread between JGBs and treasuries just fucking absolutely tanked.
Yep.
And because of that, you notice that like the amount of leverage being put into, all kinds of options has really kind of dried up. Besides, obviously selling puts, we know they're going to sell more puts.
Well, I mean, short balls come back, right? But it's not been strong, right? It's been consistent, but, like if we look at correlation, we're roughly just where we were last Friday, you know? Like
Yeah,
it's not really like most of this week was just turning around that like break and that almost inversion or uninversion, right? Oh, 1 second, I gotta take a phone call.
don't worry, I'm just timing out, Bob. Hi
All
guys,
right, Dad's gone.
Dad's gone. Let's go. What do you
It's
want?
funny.
What
I
do you
call him
want
Dad, and I'm pretty sure I'm older than him.
to know?
Your dad's gone. You guys talking about ball without me? How dare
No,
you?
my other dad's here. It's okay.
What did we do
What?
wrong?
You guys started talking about ball without me. How dare you?
Oh, I'm sorry. I didn't know that you wanted in on that conversation right
Well, we
away.
we started off with bonds, right, which is a perfect segue into ball.
Yeah.
All
We
right.
haven't we haven't
You want?
dove deep into vol yet.
Okay. You let me know because I got all that ready to go.
Okay. The only thing that I've hinted at so far is that, they've really only turned around the action from last Monday. And barely that.
Yeah. It's fun. It's fun because they're trying. They're doubling down.
Yep. Yeah, well, they're gonna, right? They need to get those positions back in place.
Yeah. They got another $200 on the FBX to go.
Mm-hmm.
What's 4% of the S&P 500 between friends?
When do we get another big downside move? We could get one as soon as this week. Like we can absolutely push up into SLD and fail and dump even harder to a new low. We probably won't get the same insane outsized move in vol unless we dump, below like 5,000. But I mean we could absolutely fail back to DN or the JPM long puts. And then, then we see if we get a continuation from there, right? Because we start to move into more labor data. We move into the Jackson's Hole, right? So, I mean, the impact of data is going to pick up from this week forward, right? Last week was the dead week for data. That was the chance to really turn this shit around. And interestingly enough, they didn't, right? Like we're still in a very bearish environment as far as the index is concerned. And yeah, we've performed pretty well, but this isn't like we haven't really reversed Monday yet. Like
No, we're
Friday
deep.
closed to Monday, we're still a little bit short of that.
I mean, we're failing the bear flag that we were kind of range bound in at the beginning of the week. Like that trend is weakening, which is, I think, not exactly a great sign for momentum.
No.
So unless we get some sort of big old bounce, uh, I expect us to, yeah, like just chop and fucking do nothing and crush volatility in the bond and equity markets.
That's the best outcome. I mean, I think we need that anyway. We need like a big crush and realized vol for anybody to lever anything up. Right? Because no one's, they're still very flighty with the put selling with VIX at 19.
Yeah, although the zero DTEs started looking a lot like they used to on Friday.
Yeah,
So they're
yeah,
getting
they fucking pushed hard on Friday. That
so
that
they're getting back into the groove. They're starting to dip their toes back in.
that 53.20 short put position that just like exploded midday and rocketed us up was nuts.
That was so amazing. I made so much money on that. That was beautiful.
I was so on the wrong side of that.
I'm surprised that the 50s didn't squeeze out. That took some balls because we smacked into 50 with just nothing but pure momentum, and they were just like, "Nah, dude, nah." That was great, and
How do you know it's not the same people?
I guess so, right? Yeah, that's very true. They may have just been like, "We're gonna sell so many fucking 50s when this hits 50."
I mean, all those puts they sold at 20 closed out of the money, right? I think honestly they just like the day just opened on Friday and they like sold the condor, right? Hold on. They like sold the condor out on the edges, right? It was like 53.70, like 53 or like 5300, right? And then I think they just kept selling both sides throughout the day, and like maybe the put side a little bit more heavily than the call side, but like just till we ended up like right here at 53.45. Because that's what it looked like. It just looked like everything got sold on either side more and more and more until we just kind of compressed into the middle of the price range.
Which is what most days on zero DTs look like.
Yeah, true. Yeah, but Friday was a lot of call selling. That especially at open, that was nuts. And that gave them that like little boost to squeeze off midday because they sold so many calls at like 30-35 that when those squeezed, that's when we like tapped 60. But then they just sold more calls at like 50, 60, 65. They were selling calls in the money on that pump.
Yeah, do we want to talk about Big 60?
Yeah, we should. Give me 1 second though. I'll be right back. You guys can start the convo.
All right. So, a couple of folks asked us to talk in depth about Big 60, what that was all about, and provide a little context around the conversations that have been happening on social media about how it wasn't a true VIX 60. It was a fake VIX 60. It doesn't count. So what happens is kind of a couple things. You have to recognize, first of all, that a lot of people have talked about how zero DTEs are huge and they might break the market, but nobody really has the guess as to how they would break the market because they do seem to allow for more immediate and more dynamic hedging. So if you think about it just from that perspective, it should be able to help everybody keep better hedges. It should actually reduce it, right? There's an argument that could be made for that. But what has ended up happening is a little bit of moral hazard in that, most of the options on the market, most of the time, are people going to the SPX and buying puts to protect their position and selling calls to scavenge, some income from their long positions, right? And right now with it being so bullish, there's also a fair amount of people that are buying calls. But in general, the market makers who have to be on the other side of that are short all these options on the SPX, and so they're short gamma, and so they have this gamma. Typically, they will hedge that dynamically with futures, which is not perfect. But wouldn't it be better if you didn't have to dynamically hedge during the day, because you can just hedge your gamma directly with other options contracts, enter the 0DTE. And so every morning, people sell options on 0DTE, SPXW, and SPY, and all of those things, right? And so now the market maker every morning can go long gamma to hedge their short gamma. So now they're using 0DTEs to hedge their position. Which is fine. There's a lot of people selling options every day on 0DTE. What happened on Monday through early Thursday, people weren't selling them, right? I mean, actually they were flat, if not net long. So now all these market makers that have gotten comfortable using 0DTEs to hedge gamma didn't have a hedge, right? And so what happened was they just didn't want to trade anything. And if anything, they wanted you to, try to sell your options, but they couldn't pay you for them. So what happened was liquidity broke down. The market makers' ability, not their ability, they could lose money, but their market makers' desire to trade any of those options basically went to zero.
I mean, the VIX. I missed a bunch of what you were saying here, but like the VIX 60 spike was just like this, like the market maker just let the spread blow out, right?
Right. Yeah. And I was
yeah.
explaining why they did that, because they didn't have they weren't hedged, right? They needed the 0DTs sold to them so that they could hedge their gamma, because they've gotten used to that.
Well, it's cost efficient.
Right. And it's easier because it's not, you don't have to dynamically do it. So what happened was, when you go to the VIX, the measurement itself, VIX is just based on the price of, far out of the money options on the SPX.
Yep.
Right? And so if your spreads blow out, your calculation for VIX is going to blow out. So basically, it wasn't a VIX 60, it was VIX undefined. The market just failed to be a market for a while.
Yeah.
So if you look at VIX futures, which can be directly traded, you can't trade the VIX. I don't know how many times I have to tell people, tradable instrument. But if you look at futures, they didn't go that high. They still went high. I think they hit 40.
Well, 36, I think, was the high. 37. Yeah. They hit exactly 37.
Yeah, so there you go. So that was probably a closer measure of true vol at the time. And then, once the market opened and we had more trading, right, and had more liquidity, they came back and tried to get it under control. And then obviously short vol swooped in and immediately started doubling down, of course. And that's the story of that. But now here we come to the end of the week, and things actually started to look back to normal. The one thing that doesn't look back to normal is long call, or is call interest in general on single name stocks, especially NVIDIA at one point was 12% of the options market just about a month ago. Now it's 5. So the options interest, the options leverage in NVIDIA has cut in half in 4 weeks, which is kind of crazy. Actually, SPXW is cutting down too. It's mostly just sticking on the SPX.
Huh. Interesting.
So it'll be interesting to see how it progresses going forward. I think what we might be seeing are, there was a nice relationship between sold puts and long AI for a long time, but now they're losing long AI. The question is, will sold puts be able to replace what they lost from long AI? I don't know.
Probably not, right? Well, your total leverage. I mean, total leverage everywhere is down effectively, right? I mean, leverage
It
on
was
UST
right back
is
up.
up, but like, yeah,
No, it
yeah,
was.
it is back up largely, but I mean, like the carry trades lost a lot of leverage that it has not
Yeah,
regained. The dollar is definitely substantially lower, right? There's other like spreads there to consider. Like
yeah.
the pound moved up really hard. Euro moved up really hard. Euro is at like 106. It's at 109 now. Um, and then yeah, I mean like I think they're getting UST back in check, but remember like as those yields push back up and dollar pushes back up, financial conditions actually get tighter. It really only opens up leverage in the carry, right? Like that's what where leverage benefits from those tighter financial conditions. Um and they're not tight enough to make the carry safe, right?
Yeah. Yeah,
So
I
there
kind
isn't
of view
that
it as
like big level, like that big pile of padding there anymore.
yeah, I kind of view it as I mean like the main star of the show is sold put. It's off the charts. It's out of control, and it's supported by all of these other levered things, right? And so as leverage starts crumbling around the edges, more weight has to be put on the remaining leverage. And so yeah, I don't think it's going to be as easy to pump it as it was before, but I think that they're going to continue trying. Because yes, they were not super successful. They didn't get a whole lot out of it. Why they stopped, because they must continue.
Yeah, I don't know if anyone else heard that. You kind of cut out there a little bit, but did what
Oh,
I
sorry.
did I just hear it was a fake 60? It's not that it's fake. I mean, it's real. It's just that VIX isn't a measure of anything physical, right? It's a calculation based on the spread of options 23 to like what is it, 23 to 32 days out on SPX. So if the midterm like 14 DTE SPX option spreads get blown out, right? VIX just rockets because VIX does a check like every 30 seconds or something for those and looks at the average of those spreads, and if those spreads are blown out, VIX moves up really really fast. And so what it wasn't that VIX 60 was fake. VIX hit 60, right? It's just that the reason it hit 60 wasn't because volatility in the system had increased substantially. It's that spreads had widened substantially. And that's why we compared it, like that's why JFresh compared it back to VIX futures, which is a tradable instrument, and it didn't go nearly as high as VIX did, right? Like we didn't see VX contract in front hitting 60. It hit like 37. So everything
That's still
above
high,
that,
but not as high.
yeah, everything above that, it's just the spreads blowing out.
Yeah,
It's also
it
the
was.
reason VIX snapped back so quick, right? I
Yeah,
mean, VIX was
exactly.
back at 30 by the end of that day. Like the spreads had gotten contained. People had sold the market makers the options that they needed, right, to hedge effectively, and those spreads collapsed, and they continued to collapse throughout the week.
Yeah, I mean, yeah, that's pretty much it. It was definitely a situation where after the big gap down, no one wanted to short zero DTE falls. So yeah, the market makers, just as JFresh described, just went ah.
VIX futures
Yeah,
liquidity dropped like a rock. Yeah. And we still like the forward convexity of VIX still isn't really pricing in the current move, right? Like, I mean, we have like if you look out onto the curve of VIX futures, everything's still nothing's really rising. Everything's still right around like 17, 18. So, I mean, without like big moves in the forward expectations for VIX, VIX isn't going to stay sustainably at those levels. Like it's going to snap out of backwardation very, very quickly, right?
I must say that that correlation chart did that thing not just nail the spike in VIX or what?
I mean, it did. Yeah. I mean, I started buying like more Vega contracts the week we crossed over, and it was fucking perfect.
Oh, that was fantastic.
I mean, the fact that spreads, like the spread had become that distorted, that negatively correlated was insane, right? And
It
for
was
the
crazy.
the
Yeah,
amount
no,
of
it was
time that
like
it lasted was just fucking nuts.
yeah, it was practically fucking two whole quarters of just like of VIX futures, you know, being normal and VIX just absolutely tanking.
Yeah.
It was ridiculous.
And I don't think this is over, right? I think this like high correlation is going to persist for a very long time, and we're gonna have probably a much healthier vol environment moving forward.
Yeah, no, it's not normal to see VIX essentially being flat when the market drops like 45 basis points.
Yeah.
Like you should see spreads move like on those moves and it's just crazy, dude. This whole fucking situation is crazy. I can't believe we're living in this time. It fucking sucks. I wish it was just some boring ass bull market and I could buy VU and chill and fucking sit around. But no, no, we had to be in some sort of crazy AI bubble with ridiculous rates and unemployment stupid low. It's just stupid, dude. Fucking hate this.
What if I told you that the markets only exist in bubbles or bursts?
I would point you to a time where that was not the case.
Can you produce that time?
It would probably be the 30s to the very early 40s.
Okay, fair enough.
Well, hold on. 30s to 60s, early 90s to 98.
No, no, that was the Great Moderation. I guess yeah, that actually really was a pretty healthy bull market. It was
Yeah.
crazy, but it was healthy.
I mean, when Clinton got the deficits flattened, that was actually healthy. I
Oh
mean,
yeah, no,
until they
people
got
talk
rid
shit
of
about Clinton, but
Glass-Steagall.
like people talk shit about Clinton, but getting the deficit under control like that was definitely a very, very good move.
Yeah. Was probably the only reason we survived the dot-com bubble.
Yeah, seriously, because we had room to do shit.
Yeah.
Uh,
Post-war economic boom was real growth. I mean, there's no question that from like the implementation of the New Deal through like the early 1960s, growth was extraordinarily healthy and largely not funded by massive deficit spending.
yeah, it was. I mean, well, the ending of a world war, right, is just a huge boost in overall like morale, right? So the economy naturally will just roar.
Yeah.
So that's yeah, it was a
What's up,
good time.
C-Mill?
There were better times.
I've put two very bold statements on the Fed Fund futures chart. If we're pricing in one rate cut or a whole 100 points of cuts, crashy. If we're pricing in less than 75, bullish.
Yeah, I could agree with
All
that.
right.
Yeah.
Yeah. I don't think they're going to cut this year. Or if they do, it's a mistake.
It would be a huge mistake to cut. They'll collapse the carry again. And now they know it, right? Like now anybody who is unaware or blissfully ignorant of the carry trade has it right in focus. And that, if anything, that traps the Fed even more.
Yep.
Yep. It's almost like the Fed's not a solution to this problem.
I mean, they have, but the problem is that Larry Fink's not a big fan of the solution.
Private equity is not a big fan of the solution. Private equity never wants to face a period of extended wealth destruction. Otherwise, private equity just would cease to be profitable.
Oh no.
Yeah.
Those poor billionaires.
Yeah, and they're so over leveraged into it, trying to scrape their 30% year yields that if anything in that market ever really went awry, huge swaths of stored wealth would be destroyed very rapidly. Which reminds
All
me,
I
I
hear
really
is
need
that
to
it's
short
becoming more
BlackRock.
affordable for the poor.
Yeah, no, the poor people would benefit, but the rich would not.
Yeah, because you know what we still need when
But it's okay. The poor
wealth is
people would
destroyed.
still then be scared of markets, right? Which still leaves the
Yeah,
advantage to the rich people.
yeah, but we still need the poor people because they actually do the work that is necessary, right? That was
Yeah.
the fun thing about COVID that I think what underappreciated was this idea of what was the term they used? Necessary workers, critical work. What was it? Essential workers,
Mm-hmm.
right? Who are all the essential workers? Nobody in the white collar is the people sweeping floors and taking blood, making sandwiches, all that fucking shit, stocking grocery stores, moving gas around the country. Like those are the people that were essential. And I feel like at some point those essential workers need to be like, hey, wait a minute. I'm pretty valuable. And I feel like the everybody just acknowledged how valuable I was, but my paycheck is not reflecting that.
Whoa, 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 Jay Fresh. It's almost like you're talking about a nationwide boycott of essential goods and services for 3 weeks.
Mm.
That's some communist shit right there.
But we'll have, you know what? We'll still have so much product management.
This is why I can't pick
The
you as my
product will be
running mate, because
managed.
you slip into your communist agenda way too easily.
Guys, the products will be managed.
That's the thing, yeah. As long as we've got 10 product
Scrum all
managers,
over me, Daddy.
The scrum masters will scrum and they
no,
won't
see,
stop because they don't want to have to do any essential work.
Bear markets
Sorry,
create
Nick.
disciplined traders. Disciplined traders create bull markets. Bull markets create complacent traders. And complacent traders create bear markets. Now just change all of the word trader to banks. And you'll be correct.
I love that.
If he doesn't exist, who's gonna jack up prices on healthcare? It's a good question.
I don't know.
Hold up. I was doing something. Are you guys talking trash or what? We would never, Nuke. I don't know what you're talking about.
He just heard Scrum and he's like, huh? Huh?
Yeah. Yeah, so we're like getting
It's like
really
the call of his species.
we're
Scrum,
we're
scrum,
getting
scrum.
we're getting really close to the launch of the beta, and everybody has been trying to murder each other in each other's sleep.
We've been scrumming all over
We're
each
all
other.
just thrashing about in a big, hot, wet pile of scrum.
Yeah, just gonna reload the scrum dumpster. I thought Dork was the scrum dumpster.
I mean, I might be. At this, I mean, I've honestly, for the past week and a half, I've definitely been the Scrum dumpster.
He kind of has.
Yeah. He loves it though. Let's be honest.
Yeah, I think he's. Yeah, sure. We'll say loves it.
I'm a bit of a Scrum slut.
I noticed JFresh has been a little data verification whore all weekend, and I like it.
Yeah, dude. Like
Oh,
yesterday,
dude.
we spent like what was it, like 5 hours just fucking banging through
I
some
don't know,
shit.
man, but I remember we were done. I looked at the clock and it was like 4 p.m. and I was like, oh my god, I wasted this whole day on this shit.
Same, dude. I was hungry. I hadn't eaten yet.
All I know is I spent my entire Saturday driving to the middle of fucking nowhere and like seeing the notifications pop up about all the fun stuff you guys were doing, and I couldn't be a part of any of it.
I'm sure that's what you were thinking.
Yep, that's exactly what I was thinking.
Well, you see, Jay Fresh. The thing was, is if he participated in what we were doing, he would have given us some inane thing to do instead of what we were trying to do. Did
Whoa!
you like
Mm,
Hold on,
redo
are
how
you
he did
saying I'm
everything?
out of touch?
No,
No. Yes. No.
you're a great product manager. You manage the product.
Yeah, you manage it great too. You do a good job.
I've never been more insulted.
Uh, yeah, no, I mean, honestly though, like after yesterday, uh, yeah, I do feel really good about where we're at.
Nuke says if beta people don't appreciate my sacrifice, I'm gonna be disappointed. You don't choose the Scrum Daddy, the Scrum Daddy chooses you. Dude, the beta people don't even know who you are. But we appreciate
Uh,
you, and that's what matters. Let's
Yeah.
just get a picture of Nuke wearing all white clothing, and then we'll frame that and we'll put it at the top of all the beta channels.
The
Perfect.
problem is he cut his hair. It would have been better if he kept his hair long.
We could get him like a mullet wig.
I'm down with that.
Yeah, I mean, I'll just put it on the corporate card.
Oh, now I gotta make a
Yeah.
meme. God damn it. I'm gonna make it.
I will say though, as much as I hate the idea of a scrub master, those little green check marks are like little gold stars from when you're in daycare, and I want them. I want my green check mark. I did a thing, put the check mark on my. Tell me what a good boy I am.
You're a typical non-technical co-founder. How dare you? I have technicals. I'm just not a programmer or a developer. I do other technical things. Sometimes. It's been a while.
All right, we don't need any more division. We're launching the product. Everything's great. We're all happy.
Carl offered to shave his beard and glue it to Nuke's head.
Let's do it.
Did someone just
So-
call Gherk basic? Yeah, me too. Anyway, so SPX for this week. What are we thinking? We got CPI, PPI, and then now expectations are flip flopped, right? Because hotter inflation is bullish now. Deflationary effects are bearish, right? And then analysts that are desperately trying to be bullish are now pricing in hotter inflation versus pricing in lower inflation, right? So everything's turned on its head going into this week. Do we think, and this is the big question, and I think this is probably the most important question that this week poses, do we think that PPI pass through is going to be as efficient as it's been in the past? Because that's what the market's currently pricing in, is that PPI is going to slump a bit, and those costs will have been effectively pushed out to the consumer despite the short delay.
I think people are just reading noise right now.
Oh shit, I gotta take this phone call. God damn, hold on.
Did you see my meme, Jay Fresh?
I did. That's what I was laughing about.
It's pretty.
Yeah,
pretty
I
spot
think.
on.
I mean, I've been a kind of a broken record on this with the data stuff, but everybody's reading tea leaves. I mean, inflation's high. It's at 3%, and it's been at 3% for like a year. The end.
Yep.
Nothing changes on Wednesday, right? So people's perception will change, but the actual situation is not going to change on a month-over-month basis, right? And so the question is are we going to get a print that's either so hot or so cold that it's going to change the long-term, 1-year look back outlook? I don't know. I think we're going to get something kind of right around where people are expecting, which is just more uncertainty.
Well, I mean, the thing is if a trend starts to form, right, that is the big alarm bell, and I think everyone is reacting to that possibility now, or the trend changing, right? That's
Yeah,
the
for sure.
big question mark.
But you can't really make that distinction on 1 month unless the move is absolutely insane, right? Unless we get like a 0.5 or a minus 0.3, I don't really see this being an indicator of anything.
Yeah. No, you're right. That is kind of the thing. I mean, it, these fucking. You know what it really is, Jay Fresh, and you're gonna hate me for this. It's the Psalm rule, right?
But even Sama said her rule's bullshit.
Yeah. Well, that's because she's a fucking idiot, but well, she's not an idiot.
Well,
She's just a speculator.
hey, if you get me blocked by her again after she finally unblocked me, I'm going to rage on you. How
Oh,
dare you? Actually, am I
shit.
following her? I'm gonna go follow her. I need to see her posts.
She's the Tom Lee of economists.
Stop it! You're gonna get me blocked again. I'm following her right now. Boom, done, followed.
Wow, she's gonna get the ping on her phone and she's gonna get all giddy. She was followed by the options man.
Oh, she just wrote a Bloomberg opinion article that said, "Oh, this is on August 7th. My recession rule was meant to be broken. It was the plan all along."
That's such a weird way to put it. Like that's like saying that's like, a hedge fund blowing up and saying, "Yeah, we were meant to blow up." Don't you?
But she's still saying the same thing because it's elevated. The U.S. Reserve should cut rates.
But like, I don't know. If you're gonna call something a rule, right? That's like calling something a law. It better have some authority.
Yeah, they just call it the MACD of unemployment.
Yeah, it's like or the Psalm hypothesis.
Yeah.
Yeah, it was right. We should treat it as an ew. Everything in like economics, like the thing with economics is it's just playing with fire because people listen to economists. Unfortunately,
Let me be let me be clear. I am not following Claudia Son for her rule. Following it for her. Her
for the entertainment.
she's the entertainment factor. Yeah.
Does she do like recipes and stuff? Because I'd follow her if
No,
she did
but
some good
she's just been
recipes.
very vocal and has been all over the place, and she's just yeah, it's fun to watch. She has very strong opinion.
That's interesting. She must not get enough speaking engagements, so she needs the ad revenue from Twitter.
I don't know.
That might
All
make me
right.
like her though, because that means that she wasn't in the good graces of the bankers.
No. Go watch one of her interviews. You'll be good.
Okay. Okay. Ugh. Yeah, economics are gross. And that's what I was saying, like, why I was bitching about, like, why I hate it so much right now is just because nothing makes any fucking sense. Unless you subscribe to Bicker and Brattles in inanity, in which case this makes complete and total sense.
Yeah. I mean, okay, so here's a great example of what I'm talking about with like the noise. So we know that like, okay, so back in 2021, inflation started and then it just kind of got out of control. And then halfway through 2022, Biden absolutely shorted the fuck out of oil. Just blew our entire strategic petroleum reserve and basically shorted it so hard, was pretty much able to completely flatten CPI and flattened it from June 2022 until December 2022, it was basically flat. So 5 months, and if you go to 6 months, it was up a little bit. So 6 months CPI was like almost zero. Actually, we can calculate it real quick. So let's see what it was. Let's see. This
I
is
think
this
I
is
think Joe
the
Biden established himself as the greatest oil trader known to man.
we'll see. He's still got to fill it.
It's true.
Let's see. Then 299. Now, keep in mind, this is all not seasonally adjusted because I feel like in this time and age, if you're using seasonally adjusted anything, you're a fucking moron.
I'll seasonally
Divided
adjust
by
that comment.
do it. See what I say about you.
Already done.
Yeah, so the 6-month I have to annualize it. 6-month annualized from that time period, the second half of 2022 was 1.9%.
Fuck.
Right? Inflation's over. Nope. And then right after that, it went up the following 6 months. It went up 2, 3, 5. This is the high quality audio that people are here for. The well prepared, well thought out. During the next 6 months, the inflation went up at an annualized rate of 4%. So doubled.
Well, look at that.
And then let's just take it from that point, 305, 109 to now. So like what, a year and a half of data? No, actually exactly 1 year of data. Well, just about. Yeah, so now it's 1 year of data. So 318 divided by 305.19. Don't need to annualize it. Yeah, 3%. So what's it going to be going forward? I mean, it's basically been since Biden shorted the hell out of oil for 6 months. It's basically been growing at 3%. Pretty much flat for 2 years now. It's been at 3%.
Crazy shit, dude.
So what do I expect this week? We'll get data that indicates that we're growing inflation at roughly 3%.
Uh,
How do I think the market will react to that? I have no idea.
All right. What did I
kind
miss?
of think the market's not gonna care.
Are we
Kind of
discussing?
agree, actually.
Are we discussing outcomes?
We're discussing outcomes of the inflation prints, and I think I'm kind of did a couple of calculations, and I'm kind of the opinion that nothing's going to change. The data is going to be confusing and sort of meh, and no one's going to care.
Interesting. Okay. Then I mean that's I feel like that outcome is inherently bullish then.
Yeah, short ball. I think short ball is going to win this week.
Okay.
Now, what does that mean? How far up? I don't know, but ball's going to get crushed. We should instead of doing SPX predictions, we should be doing VIX predictions.
No thanks. Because we'll always be right. We just draw an arrow down and we're only wrong 5% of the time.
Yeah, exactly.
The real question I have is wind down. See, I feel like the inflation, if deflation is stronger on the CPI side, that's going to be quite bearish. Like tech is going to reverse its gains. It's still too unstable, I think, for them to force the dispersion more against falling yields. Because I think the little bit of leverage they've gained in the dollar will collapse out again. So I do think there's like I agree mostly like short vol is incentivized to continue doing what they do this week, but I think there is a much greater than zero chance that CPI doesn't ease that path forward.
Yeah. Yeah, I mean,
And then well, I mean, okay, if CPI is hot, then we're gonna need cool PPI, right? If PPI is hot, that's gonna tell us everything we need to know, or hotter.
Yeah, I mean,
Because
I
that's
think
going to be
again, it's
margin contraction fears again, right? And more recession fears. And
but it's not going to be super long lived. I think that those people, I mean, it's not going to you can't dramatically change the long term expectations unless you get a really huge hot or cold print. And we just haven't been getting those.
true.
That was kind of the argument I was making. I mean, inflation's been basically flat at 3% for almost 2 years.
Yeah, we would need to see a decline in GDP. Hmm. Well,
We we
what
do have
about the
some jobless
bump? What
claims
about the
to
bump in productivity?
yeah, you just call inflation productivity problem solved.
Well, we don't want that now, though. We want productivity to fall and inflation to rise for the bull case, at least. Or at least the tech bull case. Right now, we're getting. I mean, we're starting to get into a market where the theses are no longer aligned, right? Like we have a very specific path forward for tech and semis to do really well. We have a path forward for, mid and small caps to do really well. We have a path forward for defensives to do really well, but none of those are aligned now, right? Like we've come from a period of such concentrated interest in one or two sectors, and now that's all like that is now fallen apart, right? I mean, we still have Mag 7 significantly overvalued, but that doesn't mean it's going to attract additional flows. If anything, I feel like people are looking to get out of Mag 7 as fears surrounding, profitability and capex are increasing. And then where that money goes, I mean, there's nothing else really around that supports that kind of money. Like there's no bull case that good anywhere. But that money's gonna have to go somewhere.
uh, straight into the piggy bank.
That's a distinct possibility.
Under the mattress, buddy.
It could also all just go into the 2-year piggy bank, and the 10, 20, and 30 could explode.
Yeah, that's also a distinct possibility.
Are there good
Uh,
plays into CPI PPI, or am I hearing it's safest to wait until data comes out before making any more plays? Um, I think oil benefits from both outcomes. I think precious metals maybe a little bit benefit. Well, if inflation's too hot, precious metals might not benefit as much. But if it's moderate, I think precious metals will stay stable at least. Things like utilities, materials, manufacturing, um, maybe like like freight. Well, shipping and transportation might be okay. Although oil prices are probably going to keep going up, so maybe not so great for transportation. Consumer non-durables will probably. The problem is they never really benefit that much from anything. Um, mm, yeah, I would say that like defensives and energy probably have the best path forward. But I mean, energy is super volatile, so that takes a lot of risk. And then like utilities and energy equities, might benefit, but they're not going to get like they're not going to benefit massively. They'll just probably stay stable to slightly up. Bullish for the foreseeable future. No, not necessarily. We're still a long way from gamma neutral. Although I would expect a return to gamma neutral.
Yeah, that's pretty much the mark of when we're finally stabilized.
Yeah. I mean, mean reversion at delta neutral or gamma neutral, and then a rejection, it would be the next like big bearish signal. Obviously, a failure back below DN at like on the monthly at any point here would be indicative of a downside continuation. But I think we have more room to the upside before anything like that happens. And probably rapidly, given the risk in the data. So on that front, I agree with JFresh. We're probably going to see things get hit real hard until like short vol get hit real hard until there's a reason not to. And even if that, hold on one second, bastard. If that reason isn't sufficiently strong, then short vol will just keep getting levered up. So it's got to be really bad.
Yeah, I agree with that.
Do we want to do some projections?
Let's try it. Can I go first?
I think me and Dork are actually tied. Hold on.
Ugh.
So yeah, you would. Hold
Wait.
on.
What did I? I don't remember what I predicted.
Where's Dorky always? You predicted up. Like much more up than we got. You had end of week 54.25. Dork had 53.61, which I assume was 60. And I had 53.21.65, which I'm guessing was 20 or 25. But me and Dork are pretty equidistant here. So yeah, you go first.
Fine. Mine's gonna be pretty easy this week. It's gonna go from 53.45 to 53.90.
Oh, okay. That's not a lot. I thought you would have said higher.
Oh no!
All right.
I'm factoring in. I'm factoring in the fact that I think that they're losing help from long AI.
Okay. That makes sense. Yeah. Hard to push the dispersion further than they already have.
Yeah.
All right. Mr. Dork, you want to go next?
Ooh, is it my turn?
Yeah, sure.
I believe Dork gets to go last.
Well, I have a Vega Tootie, so that means market go up.
Yes, it does.
So I don't know. Where are we? 53.40. Okay, so yeah, I mean, I expect we get to 54.50 by end of week, but how do we get there? Because when's the data? That's the real question. I'm not even looking at the
Tuesday,
fucking
Wednesday.
calendar. Tuesday and Wednesday.
Well, Tuesday, Wednesday, CPI, PPI. We actually have quite a lot of data this week. Besides that, we have, I think we have like Japanese GDP. We're gonna have industrial production. We have British GDP. We have U.S. retail sales, which is gonna be a big deal. I think that's Thursday. Manufacturing production, industrial production, business inventories. We have the housing market index. And then Friday we have building permits, which is weird. And we have the Michigan consumer preliminary again.
Okay.
So we actually have we have a pretty packed week.
Yeah, we kind of do, don't
just
we?
nothing tomorrow. Tomorrow's like
Yeah, that's interesting.
I think tomorrow's just like a 3 and 6 month auction or something.
Hmm.
And the fucking like WASDE report.
Well, then I'm gonna go with open flat. You know, keep things nice and simple that way. 5,400 by close on Tuesday. And then where does that put me in relation to J Fresh? Okay,
Higher.
and then that puts me higher than him for end of week.
Yeah, 54 closed Tuesday.
Yeah, 5,400 close Tuesday,
All right.
and then flat until the beginning of Friday,
Okay.
and then fuck it, 5,250.
Oh. Well, hello. Really went the not the way I expected on that one, to be honest.
Yeah, you know, I had to keep him guessing, right?
All right, so I'm just gonna go way more bullish than you guys, and then slightly more bearish. Is that Thursday? Hold on.
Ugh, I got the 2 layers of the Rubik's Cube done. And now it's at the top level again, and I can never fucking figure out how to do the top one.
Hmm. I feel like I'm too much in agreement with you here.
Look at you.
I don't like this.
And it's the third Friday. I mean, you know what? Actually, I can change my prediction if you want.
No, it's okay.
I mean, I have a better prediction because our beta is coming out.
Oh, the market crashes.
The market just completely crashes straight to zero.
Bitch. Hold on. I've got like a lot of things going on right now. There's
I just by the stream on. I just see us swinging around a fucking fly swatter like a sword.
there's a massive hornet in my fucking office right now. All right, you know what? That's enough of this. Someone take a screenshot of this bullshit prediction, and then
Color your screen before you hit V wasp.
Yeah, we got work to do.
yeah,
All right, I got it. Here, launch dot plot.
my Gherk Wiener indicator, which is now the name of this, um, says 60% chance of down, 40% chance of up.
Nice.
Oh, great. So previously we've gone down.
Not. Hold on. I'm using linear regression. So yeah,
Even worse.
yeah. So yeah, that's previously over 250, the prior 250 hours of trading, we've gone down.
Awesome.
I love knowing that the market went down.
Technically, the Wiener indicator is 1 for 1. That's true. Yeah, which is being ignored right now.
One data point. That's all we need, baby. Full
Hold
court.
on,
Let's
hold
go.
on. It's 1,000 projections of the past 250 candles.
Yeah, so it's telling us that we went down.
Previously, not future, but we once went
Right.
down. Yeah. Okay. All right. As long as we're on the
Great.
same page.
Awesome.
Yeah.
So you created a backward-looking indicator.
I drift adjusted it.
Oh, okay.
Yeah. It's a projection analysis, so it's not entirely backward looking. It is making forward projections based off of prior data.
Right.
Which is
it's telling you lies about the past.
Well, no, it's telling you lies about the future based on the past.
Yeah.
Which is not the same as just lying to you about the past. It's not RSI.
It's kind of the same, though.
No, because RSI doesn't go forward.
But everybody uses it to say that it's basically going to reverse. So it kind of does.
I mean, all RSI tells you is that something is up or down and has been for a while.
And that's exactly what your analysis tells you.
Well, no.
I will fight you on this until I vanquish it.
Oh, you're a bitch. I would, but I know you'll win, and we don't have time for that right now. We're busy boys. Next week.
We are.
We can revisit this next week. So the perfect indicator, the more JFresh dislikes it, the more I like it. Thank you, Carl. I can always count on your support. All right. Thank you guys so much for coming on. I appreciate it.
No problem.
Let's get back to work.
Yep.
I'm gonna spend the next 3 hours on the phone with a lawyer, so I'm not excited.
Awesome.
Yeah, it's super cool. All right, guys. Later.
See ya.
Everybody.
For the rest of you, if you guys had any questions and you didn't get to them on the stream or I just ignored them, feel free to shoot me a DM and I will try to answer them if I remember. I should be around for most of the rest of the day, but I'm going to be pretty busy over the next 3.5 hours or so. So thanks for tuning in. I'll have Pickles Picks up tonight. Everybody enjoy the rest of your weekend. See you later. Let's get ready and make some money tomorrow. See ya.